Hello, guys. Good evening. So we're here today, very excited to introduce a great team. They're from Greece, and they're actually the most important people in Greece on cryptocurrency right now. And they have a great project which they're going to talk to us about. And I'd like to introduce Xenophon, which I met through my program at university. We together studying in the master in digital currency at the University of Nicosia. And he's actually a famous guy in the crypto industry and in Greece, but also worldwide. He has a lot of contacts, and he's been working on amazing projects. And I'm gonna let him introduce himself, and then introduce his team that is here with us, and then we're gonna dig deeper into all the crypto topics that we have for today.
Absolutely, Tony. Pleasure to be here. Thank you for inviting me. Xenophon Contour is here. We are starting a project called Athens DAO, which is associated with a community that is invite only and curated highly. With me, I have two of my colleagues and active advisors in George and another gentleman who's asked to remain anonymous for now. We, in short, are a curated community with both traditional lab attached to the community and attached to the DAO called Athens DAO and Athens Labs, respectively. What we aim to achieve is twofold, right? First of all, we want to make sure that we can provide the service to our community, which is with yield farming, and provide our community with access to strategies that they would normally not be able to execute themselves, all under one transaction, under one gas fee. And the second would be to highlight much of the community that exists in Greece but is not yet known or sufficiently activated globally to achieve what the talents that we have here can achieve. And thank you so much for the kind words. We are quite established in the Greek ecosystem, but we're not the best. And there are so many amazing talent out there that we can help bring up, which is a big part of why Athens Lab exists and why the community was started in the first place. With that, George and my other advisor, which is the way that I'm going to call you henceforth, would you like to briefly say a few words and a quick hello?
Yeah, sure. So George, also, as Jonathan mentioned, I've been working together in this project. My main focus is on crypto investments and exploring the latest strategies for yield farming and different other kind of strategies that have come up lately in the crypto world. And happy to be here as well.
Yeah. Hello, everyone. I'm the other guy. My main focus is in policy, decentralized finance, and decentralized network governance. I'm also working with Xenophon, as he mentioned, and we are excited to explore this very transformative field that lies ahead of us, and of course excited to have this discussion with you.
Thank you, guys. I mean, I want to tell my community and my team that I was really impressed with you guys because, I mean, the amount of network you guys have. I mean, basically, Xenophon and also you guys have so much, so much people in the industry. I think from Vitali to Charles in Cardano, I mean, I saw documents and saw some other decentralized forum, and I think there were events where you guys basically know all the personality in the crypto industry. So, of course, you know and understand things that we as a normal human being are not able to know for a while. So, I mean, to have an insight from you, that would be amazing. And I don't know, maybe I can start with a small, simple question. Then some of the questions will be also done by my colleague and friend, Mehdi. But, I think that one of the simple questions that I can ask is about Ether. We as equity investors, we always try to understand in companies, for example, what is the company that makes money or gain most value is a company that have a moat. A moat is like a competitive advantage versus other type of companies for some reason. Maybe because the product is so better, maybe because they have a special advantage that other company or special brand other company cannot actually beat. So I think somehow can work similarly in the crypto world. Like you have a currency or an ecosystem. Let's call it an ecosystem more than a currency that is much better doing things versus others that is going to grow and potentially is going to gain market share versus others. Obviously, the first thing I think is about Ether, about the difference between Ether and Bitcoin. I will ask if you think that Ether will ever eventually gain more popularity and eventually market share than Bitcoin, and how do you see the Ether upgrade going through and what's going to happen at the end of the upgrade, and then we can move from there.
Thank you, Tony. I know all of us are would be happy to jump and answer this question. So I can give you a pretty brief overview. I think everyone here understands the value of Bitcoin, respects it as the king currently and as the leader in what became cryptocurrencies and blockchain. We were not going to be here if it wasn't for Bitcoin. And there are multiple ways that Bitcoin will survive and thrive in the future, but we are big fans and proponents of Ethereum, very big. Specifically, we believe that if Ethereum succeeds, and it looks quite likely that it's going to be one of the main winners, but we really can't predict the future, then we believe that, yes, I personally believe that the market capitalization of Ethereum will increase and will perhaps outpace Bitcoin and surpass it. I believe that because if it becomes the basis of finance, as we've been saying as a joke, but also as a target, it will probably hold more transactional value and through L2s and L1s, and it will probably become the basis of much of what's going to come for the future of finance and decentralized finance. That's my quick response. If anybody else would like to jump in here.
Yeah, a quick comment from my side. You mentioned the moat, right? So that's quite an interesting way to approach that, and we can see that both ecosystems have a moat, right? So Bitcoin, of course, was the first mover in the space, and the biggest moat it has at the moment is, I would say, the security of the network and the decentralization, right? There is no other network which is more decentralized and more secure than Bitcoin, right? On the other side, Ethereum has also its own moat, right? So the big, in comparison to Bitcoin and also to other networks, is the smart contracts, right? So you can do a lot more complex things. You can build on top of Ethereum a lot more complex things that you can do on Bitcoin on the layer one, at least, right? And in terms of the market capitalization, or you mentioned market share, I think, yeah. So, I mean, Ethereum, I mean, the big difference is that the Bitcoin is a deflationary asset. Like, we just have 21 million Bitcoins. You can never have more. Ethereum is not like that, right? But you have to keep your eyes on the new improvement proposal that is coming in July, the 1559, which is introducing really interesting aspects into Ethereum, making it essentially a deflationary asset. They're not capping the supply, but they're introducing a mechanism, a burning mechanism, let's say, that will reduce the Ethereum circulation, right? So that will help a lot to increase its value as well. Right?
I would like to add that Bitcoin has some very good reasons for being at the top of the cryptocurrency market cap. Its value proposition as a digital gold still stands as very valid, albeit somewhat less exciting when compared to that of the Ethereum. But I do think that with CBDCs and negative interest rates coming and helicopter money and other measures in monetary policy that might affect depositors, the value proposition of Bitcoin as a digital gold will still remain compelling in the future. Now, Ethereum, on the other hand, has a lot of things going for itself. One of the biggest questions, if you're making any kind of platform that can run smart contracts, one of the first things that people are going to ask is if it is EVM compatible and if you have developed bridges to interoperate with Ethereum. So both ecosystems are great. I'm not sure value, it is subjective. It really depends on what the market wants. And I think that both are valid, and Ethereum is certainly an exciting project. And we haven't seen the end of it in terms of applications, not even close.
Thank you, guys. That was amazing. I mean, also the Bitcoin being considered like as a digital gold, like a commodity, and maybe playing in the macro as an edge with inflations, and maybe looking at Ether in more like it would be a tech stock, that could be appreciating during the time, with time and grow, its ecosystem. Do you think that other competitors coming into the space like Polkadot, like Solana, Luna, would they be able to have eventually also Cardano? Would they eventually to challenge Ether? Would they be an Ether, I wouldn't say killer, but at least competitors? Would they gain value with time? Are they more undiscovered? So would they have more potential versus Ether? Or when Ether would prove that is when the Ether 2 would be upgrade would be done, then Ether would probably prove that there's no need of others. What's your view on those?
And just to add on that, do you think are we heading towards the future where the market will be fragmented with different ecosystem, and there will be like a lot of perfect competition with very easy barriers of entry, and we'll perhaps see many ecosystem coexisting together?
Yeah, sure. So exactly, that's your last comment, exactly my point, right? So I believe, and I think, yeah, our group, we have discussed these topics as well. That's the correct word, right? The coexistence and interoperability, right? So there is no killer of anyone. So whoever talks about killers, I think they cannot see the future very clearly, right? So you will see that we will have different kind of chains, different kind of ecosystems with their own target, with their own community target and user target. Like there will be Ethereum will be most probably very expensive, will be for the bigger accounts. You will have the L2s or Binance Chain or Solana, which is cheaper for even smaller players. You can have Flow, for example, which is a specialty in NFTs and so forth, right? So that's how it's going to work. And everything will come together through bridges. You see like projects, for example, like Cosmos or Tor Chain or Multi-Chain or AnySwap, just bridging all these things together, right? You go from Ethereum to Binance Chain to Phantom to Luna and so forth, right? So that's where we're going.
Yeah, I'm not a proponent of the Ethereum killer dogma. I do not believe that there will be such thing. I do not believe that open blockchains will be a zero-sum game. Different networks have different trade-offs, and this is something that we knew from the beginning with the blockchain trilemma. And different design options will satisfy the needs of different people. If you don't care about decentralization so much, then you can do whatever you want to do on a chain that does not care about decentralization so much. I do believe that in its current state, Ethereum serves the role of this ultimate finality layer with more flexible and speedy chains, taking up some of the more flexible applications such as decentralized finance. We've seen the shift in Binance Smart Chain. We've seen the shift in Phantom and in many other chains. One of the first things that those newcomers in the space develop are interoperable bridges. And this really shows the way to the future, that it will not be a zero-sum game, but rather a network of communicating networks, if that makes sense. Now, that's for Ethereum 1. Ethereum 2 is a whole nother beast, and nobody can say for sure what the effects of this scaling process will be. And of course, scaling will always be the question. The more we can scale a network, the more applications we will put on top of it, and the more it will need to be scaled. So I do think that the only way that we can, make this open decentralized space relevant is to make it interoperable.
And I'm going to add a few things on here. I do believe that in the future we will see the growth of permissioned ledgers. I do think that the biggest competitor to Ethereum, which never came to fruition, at least not yet, was Libra. I think there are benefits to some permission chains. There are trade-offs, as one of my colleagues said, and really that matters. If you were to build on Libra now DM, you'd have access to over 1.5 billion people that will be able to make money on there. You won't be able to get that type of scaling in a permissionless ledger, at least not yet from our minds. That will probably change in the future. I also think that programmable CBDCs might emerge in the decades to come, and that will also be a fundamental shift in the way that we do interact with each other and we do business with each other. However, the cutting edge of innovation is taking place in Ethereum. The growth of the community, the growth of the developers is outstanding. Everyone is trying to get into this Ethereum killer, which reminds me of the same mindset of what the real Bitcoin was in 2017. People were hoping to get into one of these competitors that they would then get market share and would make them rich. I think the reason people are so excited with projects like Cardano, which haven't really produced something as of yet, is because they hope that if they buy in early, they will make millions, the same as some of the early pioneers in the space. But that simply, I don't think that's going to happen. Now, That's just an example for ADA and Cardano. I don't believe Cardano or ADA are specifically about projects, and they have tremendous talent. Much of it is actually based in Athens and are Greek. So we would love to see them succeed, and we would be more than happy to build with them when there is something for us to build on. And to name a couple of other projects which I believe have value at the moment, Rootstock, which is a sidechain on Bitcoin that allows for smart contract deployment. You have Binance Smart Chain, which has a competitive advantage because the liquidity there exists from the centralized exchange, and you can do many things there. Solana is growing fast. Thor Chain seems to be a tremendous project for the future. Terra Luna, which we've discussed privately between Tony and I and many other people in the call, we believe it's a superstar. Matic Polygon is another project which we are fans of, and Phantom, Avalanche, to name a few. There's also multiple side chains like Secret and XDAI where we are probably going to deploy our DAO. All of these projects, however, have one thing in common. They are EVM compatible, and that won't change.
If you we do equity research, and there is a lot of things that are similar in equity to crypto. One other thing is that what happened in equity, that when some company are really big, like think about Apple or Amazon, some younger people or people that want to make a lot of money fast, they don't really like to buy those because they understand that they know that the growth, the exponential growth is limited. I mean, Amazon cannot double its market cap in 2 months that easily because obviously it's already huge. So the same thing happened in crypto. Probably some people think that they can buy a smaller, let's call it, ecosystem with a smaller market cap so that they can grow faster. In some period, they can probably outperform Bitcoin, or in this case, Ether. Do you think that if you want to name only one, I know you named few of them, but which one is the one that you, beside Ether, that for you is the most? I mean, if you cannot put your money into Ether or in Bitcoin, and you can only choose one to put your money, which one would that be and why?
Are we specifically talking about smart chains, smart contract chains, or are we talking about crypto in general?
I would say just choose the one that the project you like more, even if it's not, crypto in particular. If you think there's one project in particular that you think is going to have that kind of growth, yes, I would prefer to be named that one.
So before I answer, I just want to prep this answer. Right now, the market is hot, and it's been hot for months. If you're trying to double your money now, you might be able to make that from multiple altcoins. However, if you double your money in 2 months, you're going to lose it in 5 months completely. I mean, I believe the crash is going to come like it did in 2017, like it did in 2013. I think we're going to bounce back from that for sure. And 3-4 years back again, we'll be making 10 times the amount of money that we are at the moment. Because, I mean, okay, I might be exaggerating, but that's how the market looks to be moving. So with that, I would beware to anyone who's listening to this and tell them, hey, your timing needs to be as your ability to catch a project that you believe is valuable. So if I were to suggest a project at the moment which is neither smart chain or Ethereum competitor, but is a project that I like and I always will like, I'm gonna give a very safe bet, and I'm gonna say MKR. MKR is extremely expensive at the moment. I got into MKR when it was sub 400 dollars, excuse me. Now it's like what, 5,500? So I am a big fan of stable coins. It was part of my research when I was in the university. I like coins like Maker. There's a few others coming out that I believe have tremendous value. I've got burned. I know other people in the call have got burned with some of the algorithmic stable coins that we were hoping can be realized. But yeah, I'm always a fan of Maker. I'm going to keep talking about Maker. I think there's a number of other projects we will talk about later that we have gathered for you that we can discuss and propose for more research for your audience. But yeah, big fan of Maker, big fan of Ethereum, big fan of the DeFi blue chips, as we call them. I mean, these are good projects with revenues, with user bases, with communities, with future DAOs. This is the future. You're still very early. It's like buying Amazon in 99.
Yeah, we all love DeFi because we understand the concept of the compounding revenue and the revenue they produce. When the asset under management grow. So that's interesting. Whatever, can ask also your team if your team, what's the view of your team on these particular questions about which they will on which where they will bet the most money if they could not bet on Ether and on Bitcoin. And also, what would be, there's another thing that we probably all want to know is how do you actually play the cycle? Because you've been saying now, hey, it's not going to always go up all the time. You're going to have a time where it's going to go down. There's going to be a period in which how an investor in our community or, people listening to us, they saw now, they probably missed the first cycle, now they miss the second cycle. How are they going to know when it's time to buy, when it's time to actually stay away from it? Because in equity, for example, we know how to value them. We know exactly how to value a company. Technically, scientifically, we know what's the growth is implied. We know what is the value of the asset, and we can actually take a decision based on that, not really on the technical, on that aspect. How do you do that in crypto?
I just wanted to comment something on how to value cryptocurrency projects, especially under the scope of traditional investment. So if something does not have cash flows, then we cannot value it. The truth of the matter is that with DeFi, we do see yield generating assets, right? So to some very rudimentary extent, some techniques of traditional markets can be applied. Now, the time frames are still very short, but I do expect in the near future more traditional tools. We will be able to apply traditional tools to value, especially assets that are native in the DeFi space. So that is my opinion, the interfacing between traditional valuation methods and what's happening in cryptocurrencies at the moment. So go ahead, Xenophon. I'm sorry for that.
I don't want to go first, actually. Let me wait. I would like to give the floor to George because he unmuted as well. And then I'm going to talk about how to manage cycles. But George, if you'd like to discuss about the project of your preference, please feel free to go.
Sure. Also one more comment for me. What you mentioned, Tony, about valuing, right? You can really do value the crypto assets. You can do valuations. We always do valuations, right? Myself, for example, I never just buy a project just because its price is good and they have a nice roadmap or they make nice podcasts, right? Or blog posts. Definitely not, right? So there are tools that you can go that way and do that. You have to look at the tokenomics, right? So it's something that someone who is not really, let's say, hasn't gone deeper in the blockchain technology in general does not understand tokenomics. But you really need to understand tokenomics because tokens are like the shares of a company, right? And they just a lot more dynamic and configurable, right? The shares of a company, there's a handful of things you can do with them, right? You can issue more, you can sell them, or you can vote with them. But with tokens, you can do a lot more things. So you guys have to go deep into the tokenomics, see really how, if the token, for example, is deflationary, or the strategies they've used, increasing in value, decreasing in value, right? And then our colleague also mentioned there are tools like, for example, Uniswap. I guess you know Uniswap or SushiSwap, right? This is a company at the moment, right? It works like a company. And if I'm not mistaken, since a couple of months, their monthly revenue is over 1 billion. So they generate fees, right? Over 1 billion. So you can basically approach it as a company and evaluate it with similar strategies. You can start getting other exchanges next to each other. You can take, for example, Coinbase as an example, which is now public, and measure the revenues and so forth, right? So there are definitely techniques there, and you should go deeper than just looking at the price. So to your first question, I would like to choose more than one, but if I have to choose just one, would be Luna, Terra. So the Terra ecosystem, not necessarily the Luna token, right? I would look at the Terra ecosystem. The reason is that they have captured tremendous value. Their tokenomics are amazingly good. So they have a stable coin, which is supported by the inherent token of the protocol, which is called Luna. So the more adoption the ecosystem is getting, so the more stable coins is printed, the more deflationary the token becomes. So it's kind of rewarding the holders, right? So you need to look at these kind of things. I'm not saying at the moment that it's a good or bad price to buy Luna, but the price is always relative, right? So personally, I've bought Luna when it was 50 cents, and I bought also Luna when it was 12 cents, right? You just have to look at your assumptions that you make, and you have to really look at the roadmap of a company or a project, and the narrative that they're following, right? And you might need to dump good projects on the way, right? So for me, it's not like, okay, the end is coming, let's liquidate everything. But we really need to enforce some risk management on the portfolio, and we can discuss on the strategies later. I mean, yield farming, for example, is one of these strategies that you guys can use to mitigate in a more, let's say, choppy market situation, that we're just not going up or falling down, right?
Thank you. Great. Now, just to address something you mentioned about the cycles, which we didn't touch upon, and you also mentioned about actually highlighting one project. Let me tell you what I really believe, and I'm going to also mention advice that I believe your community should listen to coming forward. First of all, my favorite project at the moment is my project, the one that we're building with the team that we have in the call. Okay, we have a community, we have the talent, we are building across multiple layers, and we're building a compliance structure next to it. We can talk a bit more about why Athens Labs and Athens DAO can grow in the future and will grow since it is in our hands to do so. But before I go about selling my own project, let me address the cycle question. As we saw between 2017 and 2020, we have one good year where everything is going crazy high. And then we have around 2.5, 3 years where the market suffers. It stumbles down. You see multiple chains become ghost chains. You see multiple companies and firms and labs stop working. That will probably change this cycle because the industry is much more mature now and the value is looks like it's been already discovered, and the respect for this industry and as an asset class is growing. But we do expect, I personally expect, that there will be a fall of 70%, perhaps even more, from the all-time high of the Bitcoin price. And when Bitcoin falls, everything else falls faster.
Wow.
So I expect that will take place sometime in 2022. I don't know when the cycle will end. I can't predict the future, but I would say that it's going to be either within the summer or in Q4 of this year. And I say that because last time around, one of the main reasons why the crypto market fell is because of the introduction of MiFID II. Now, MiFID was one of these directives actually, that came out of Europe that created more pressure to provide AML, KYC services, and to show that you have clear risk management of who you let buy and sell projects. Now we expect, and we know that there is multiple other regulations and initiatives taking place. FATF's recommendations for VASP, for example, shifts the liability from no one to anyone in charge or participating in the community of a project on DeFi. It's not final yet. The recommendations haven't happened yet, but they are happening in June. And I do believe that's going to signal a bit of we will probably signal the last part of this cycle, as I think it is. And then we know that the market and crypto asset regulation is coming. It's already in the European Parliament. It's already been drafted. Now it's being reviewed from MEPs, members of the European Parliament. We know that there will be regulations that will significantly affect the market for the first time. And that's both a good thing and a bad thing. It's a bad thing because the hype and the cycle might diminish. The highs might not be as high. The lows, however, won't be as low either. And there will be pressure, and they will become much, much harder for projects that may have raised a couple of $1 billion in 2017 and then disappeared without doing anything. Like that type of projects are not going to be seen. I mean, the cowboy days are almost over. That doesn't mean that we're not going to the moon. I mean, we will be moving forward. The industry will be growing. The value is real. The innovation is real. The talent is real. There is no industry with as many geniuses in quotations as crypto. And that's a quote from Mel Gelderman, which is the founder of Monolith, a very interesting project combining traditional finance with DeFi. So that's true. The reason the Bill Gates of our age is Vitalik is because crypto is the same technology or the same class of technology as the personal computer. and then the internet companies that came about afterwards. So yeah, beware, wait for the main cycle, sell when you see the price of Bitcoin and other crypto doesn't reach the previous all-time high. Sell for stable coins because you might be wrong and you might want to buy again, and that's going to become easier. And start enjoying some of your profits, because if you are in the industry, you've made tremendous profits already.
Yeah, someone has made the amazing project, actually. I mean, amazing profits. I mean, I could not believe. I mean, when I speak to some people and we were complaining about how expensive could be university, and then you see that, I mean, $100 invested in any good project in the past few months would have made probably 10 times, 15 times the money. So it was good to be close to the field and understand everything. About the valuations, just coming back to that, and there's one question about stablecoin. When we do valuation, we did obtain valuations on crypto, mostly on projects. As George was saying, for example, we do a discount cash flow, and we on Sushi Swap and on the Uniswap, we understand the concept. We understand that they generate, fee for the token holders, and that could be so like dividend or cash flow. And when we do valuations in equity, what we do is just try to understand the future cash flow discounted to present value today. The only issue is with the fair price of things. When we buy an equity, we do discount cash flow in equity, we imply a certain growth, and we also imply sort of margin of safety. We understand that there is a minimum amount of sustainable earnings that's going to happen anyway, regardless of the growth. And that one is a bit more complicated in crypto for some projects, for example. Now, what would be interesting, and I just put it there, equity researchers now are coming closer to try to understand, to value crypto, but they don't really have the background in crypto, but they do have the background in valuation. So that would be great. For example, we in the industry, we have something called CFA, it's a Certified Financial Analyst Certificate, where people study how to become an analyst, how to use those tools to analyze equity. It would be great if they could be one day, and maybe with some of you guys, because you know a lot about how to value also crypto projects, if there would be a body, like an international body like the CFA, also for the crypto, that would be great. I think there would be a professional figure that would be really requested heavily from industry, because now a lot of funds and equity funds and ourselves as well, I mean, we want to move into invest heavily in crypto, but we want to invest wisely, try to understand the value rather than just simply just go for the trend. So I think that would be an amazing
Yeah, and just to add on that, like in crypto, we have found some nuances. So let's say in equity, we have share buybacks and we have dividends, but in crypto, we have staking rewards. And we also see that growth sometimes doesn't have to be linear, it's exponential. So how do you incorporate, for instance, staking rewards or perhaps exponential growth within your model or within your framework when you're trying to evaluate crypto?
So, for example, staking rewards is a bit, I mean, if we just talk about staking rewards in the sense of Cardano, it's just inflation, right? So, I mean, there is a theory, there is actually a whole science around that. It's called token engineering. It's something I'm personally looking really close at the last couple of months. So you have to approach these kind of things as a system which has, let's say, the buy pressure and the sell pressure, right? And then you always, so that's what token is, right? So imagine a token like, let's say, Cardano, right? The Cardano is just doing inflation at the moment. So you stake your tokens and I'm giving you rewards, right? Everybody thinks, oh, they give me free money. No, they're actually diluting you, right? And by asking you to stake, what do? They reduce the sell pressure. So they know that the more people they stake, the less people will sell, right? So you get, this is a bit of the simplistic model, but you need to start from that. You need to approach when you analyze that, this kind of model. And there are models in Python which are simulating exactly this process, right? So you're starting from this amount, from, I don't know, 12 million tokens, and you do some assumptions, and then you do a simulation, and you reach to these conclusions I mentioned. For example, if you assume that your inflation rewards is more than 10%, then you can assume from other projects that around 60% of your circulation will be staked. So 60% of your circulation will be basically removed from selling pressure. Nobody can sell, right? And what happens if nobody sells and you basically increase your marketing and the buy pressure is coming, the price goes up, right? On the other hand, if you don't have any staking, so if you have all of your tokens in the market right? And you have no incentives to lock them somewhere or not to sell it. Everybody will just sell, right? And there will be no buy pressure. So this is, I mean, I think we should not go deeper in that because it's a huge topic, but it's super interesting and it's going to the direction that Tony just mentioned before. It's a whole science. So basically engineers are doing that. You need to really know Python, like to code these kind of things, create models.
This is amazing. I mean, it's really amazing, very interesting. I wish maybe in the next time we can go deeper into it, because what you're saying is because it could be seen somehow as a Ponzi scheme if you look at it deeply, in the sense that if you don't create real value, it's just a marketing way to reduce pressure. But at the end of the day, you're diluting the company. But you are stopping the sales pressure, but you're not really creating value. So the real value will be created in how good the projects on the ecosystem will be. But if that good things will not happen, that kind of thing is just a strategy to basically reduce selling pressure. But at the end of the day, you are creating more coin, that therefore you're basically diluting, let's call them the share of the company or the token in this case. So it's important to look before than simply the rewards, correct? That's what your message probably.
Yeah, exactly. So my point is, like, for example, you need to have some principles, right? So for example, for me, I will never buy I will never buy Cardano, right? No matter how good it is or how many peer reviews or researchers, because I've never seen what it can do. I cannot use this thing, right? I never buy a coin that I cannot use it personally. I don't like to just buy something and just leave it there and pray that it just goes up, right? So that's one thing, but that is just me. So Cardano and similar projects, what they do is, they just basically try to fundraise for their development by giving this bait, this carrot to the people, lock it so you don't sell it, so I give you more, right? And then on the other side, they invest a lot of money on marketing. So there are like actually a lot of projects who have nothing. They just invest all their money in marketing and they try to basically convince people with staking or other mechanisms not to sell, basically. And that's how the price goes up. And they have nothing. There is no value. I mean, you cannot really, you cannot analyze them, this kind of project, because they're just a marketing campaign, a roadmap, and some promises. I don't know, and maybe a GitHub repository or something. But I don't like these kind of projects, no matter even if Vitalik is behind that,
Amazing. Thank you very much. We learned so much from this. It's really, really interesting. Please, sorry, go ahead.
I want to clarify one thing about staking, which is valuable. As George said, it's important as a tool for preserving the price of the token. And that's important to note because these tokens are used as grants from the communities to actually help develop the project and the product. So if they can't protect the value or the value of the price or the price of the token, then they won't be able to provide, oftentimes, especially in the early stages, with the grant rewards needed for the growth of the product. They won't be able to provide the wages or the bonuses to the developers that are taking a risk to be part of a new project when they could be working for six-figure wages in any of the big blue chip DeFi projects or other projects in crypto. So I wouldn't call it a Ponzi scheme by any means, simply because people are buying these projects as a share of the network, a network which is growing. And if it does grow, it's going to make them tremendous value, both for the utility and for the actual token itself. And you also find ways to add governance to it, which is crucial. And we haven't discussed this. Perhaps George or El can respond to that as well, because DAOs and governance are a crucial tool for how the future of finance is going to look like.
One comment to that, Xenophon, very good points. And you gave me a very interesting point to touch upon. So I don't believe that exactly to this point that just because the network will grow, the price of the token will grow as well, right? That's why I mentioned you need always to look at the tokenomics. There are a lot of tokens that do not capture value, right? And you really need to go deeper in the technology to understand what capturing value means. I'll give you two examples. One is Rune, the Tor chain, which basically they say whoever provides liquidity on Bitcoin or Ether, they need to provide the same liquidity in Rune. So if you extrapolate this model with the example we discussed before, that means that when the more people will have to buy Rune, so the price will go up, right? And I give you another example, Uniswap. We all love Uniswap. It's an amazing project. From the analysis I've done, I cannot see, so this token does not capture value at all, right? The SushiSwap, for example, gives to the sushi holders part of the revenue. Uniswap doesn't. So at the moment, Uni token, no matter how amazing it is and how high it will go, because it's an amazing company, people believe that, it doesn't capture any value. What can you do with the Uni token? You can just vote. That's it. And if you are in a company, in a project like Yearn, that your vote is really valuable because you basically dictate or define the strategies, then it's okay. But if you go and look at Uniswap governance, there is basically nothing even to vote.
Amazing.
Yeah, that was a comment.
Amazing. Thank you. I mean, that's why it's very important to understand deeply, what you buy and, what's behind the token and the system you hold. There's one thing, and then I'm gonna let also Mehdi go ahead with the questions. And this is the question on stablecoin. Some of the projects that seems to be extremely effective, like for example, Terra Luna, is because they use the stablecoin, the possibility to stake, the stablecoin and things. But as we've seen for Libra, we actually studied deeply, I think in one of our university as well, module about the stablecoin, is that one of the reasons why Libra did not take off is because the use of the stablecoin they wanted to adapt, and all those regulations and how scary that can be for central banks. Do you think that projects which has to do or deal with stablecoins can be more easily outlawed, by the CAC, by the governments, and how would be the effect on the all the ecosystem if that happens, and what gonna happen to people which gonna hold the project or stable coins in projects? Like how do you see that?
Well, the first thing to realize is that stable coins, admittedly, are not the go-to investment medium for people that are looking into crypto. They're a good tool for hedging risk. They're a good tool for warehousing of funds. They can be used in some yield-generating strategies, but are not like some decentralized finance project that can do a 10x. So they're not an intuitive investment option. Now, in essence, what stablecoins are a primitive medium that interoperates traditional economies with the decentralized economy, right? The whole purpose of stablecoin is, or initially was, to peg it to some stable value, most popularly that of a sovereign national currency, to use it on chain actually. And besides regulation, what can have an impact on the usability of stablecoins is the issuance of CBDCs, meaning digital currencies backed by sovereign nations that are available to the general public. Now, depending on their characteristics and specifications, and if those play well with deployments from the open blockchain space, the role of stablecoins might be diminished, right? And significantly so. Now, I'm not suggesting that you will be able to farm on SushiSwap or whatever with a digital euro tomorrow morning, but in the long run, there is an argument to be made that much of the utility of stablecoins could be, something that CBDCs take over, and that is besides regulation. And this is something that not many people consider. So I would look at CBDCs first because developments there are rapid, and now, so this would be my response. I do see a future where the role of stablecoins diminishes. I don't think that it will be disruptive to the ecosystem, and it will be both a factor, and it will be both because of new regulations as well as CBDCs, and both are very important.
Yeah.
And one other thing to consider is that regulation will make will make room for CBDCs, right?
Yeah, just to shed some light, so just to add some more color to it. So let's say in terms of the Terra project, we have Terra stablecoin. Basically, it's algorithmic stablecoin, and it's basically fixed. But whatever value proposition a user finds within the ecosystem, Luna will be burned. So our point is perhaps that because the demand for that stable coin is sort of artificial, even though the underlying value proposition is there, but the stable coin itself is kind of algorithmic. Don't you think in that way, a regulator might find that, okay, there is no underlying backing, and it could be perhaps outlaw on that basis? Or could you perhaps shed some light on that? Because I think one of the criticism of Libra project was that it could basically become a global stable coin, and it kind of threatens the whole central banking and monetary policy framework of theirs.
And I want to add just something as well. Like, for example, some friends tell me, hey, I can just stake on on USDT, like on a Terra platform, and have 20% a year on stable. I mean, many people can retire with 20%. Here, obviously, they should understand more about the risk and things. But I mean, would that these not how? I mean, could not that create a problem? Because when we assess, we've been long on Terra from 0.33. Obviously, we sold most of it much earlier. We did not understand it could go so high. But at a certain point when we saw the risk, we thought, this thing is too much. It's like it can be a serious threat to a real coin, like to a real currency. That kind of thinking is a mistake. Shall we also analyze risk on the basis of how big the threat could be to the central system, for example, or that's the wrong way to look at that?
This is a good question. First of all, I want to state that I mean, given the volatility in the space and how things are changing, I do not consider stable coins as a viable retirement plan. That's the first thing to say. So, secondly, I do think that sovereign nations are more threatened by big tech companies because their solutions, because they will leverage their existing networks, which are huge, and their solutions will interoperate with existing front-end solutions that already exist in the regular economy. So the first threat is there. I do not see any immediate Terra, Tether, or USDC, or some other deployment from the decentralized space can threaten a sovereign nation. That being said, depending on the regulations that will be developed to mitigate the impact of privately issued global stablecoins, some of those might impact decentralized solutions as well. I do not see a future where governments will very surgically target a specific decentralized stablecoin, but wider regulation might affect those. The important thing to consider here is what we call geographical arbitrage, right? So Facebook necessarily has some specific geographical presence within some boundaries and can be regulated depending on in which country it is active. Projects from the decentralized space are not like that. They are geographically distributed. They are not managed by a single entity. And what I would advise anyone developing a stablecoin project is to make sure that they cannot control what they have created, because they will be likely kept liable. So yeah, those are my 2 cents. I wouldn't be very afraid to that stablecoins will go away tomorrow, but and I think that if at some point in the future they are to be regulated, there will be a lot of warning shots along the way, and opportunities for people to reassess their investment choices.
So let me jump in here a little bit myself as well. Stable coins are my passion, and really, in many cases, they've been one of my areas of focus for all of 2019. I was writing a thesis on them, and then Libra came about, so I had to turn my thesis in two and start again. But I am a huge proponent of stable coins. I believe stable coins are undervalued in crypto assets at the moment because of dogmatic beliefs held against fiat currency, as many of the older members of the community might tell you. However, let's look at the track record. Over the past few years, the way the growth of the industry has come about has been through investments that came in Silicon Valley through stablecoins. The market capitalization, meaning the amount of stablecoins minted, meaning the amount of dollars in bank accounts for these companies, has exploded as fast as the market capitalization of the whole industry. If you look today at Tether, which is one of the many stablecoins that exist, and it's the most famous one, you will see that its volume, the amount of Tether traded per day in dollar amounts, is oftentimes way higher than Bitcoin's daily trading volume. You will see that across multiple different criteria, that the growth of stablecoins and the way that people use them indicates that the market prefers them as both an onboarding and offboarding platform at the moment, and as an end of day benchmarking product for their trading activities. The only way that you can threaten the way that stablecoins operate today is if you provide a better alternative, which could be international, easy to use, interoperable CBDC. However, that's not coming soon. That's going to be coming in, well, 5 to 10 years, and even when it does, it's probably not going to be what we are hoping for it to be. There is still a long way to go for stablecoins, and when they do come about, they're going to compete with fiat-backed stablecoins first. That means companies which have a one-to-one relationship with a fiat currency locked into their bank accounts, the Tethers, the USDCs, the Gemini dollars, the True USDs, and so on and so on, the Paxos standards. Um, However, there are other types of stablecoins, the ones that you described as well, algorithmic being one, which I wouldn't say that Terra's TUSD is one of those. Um, but there are algorithmic ones which are very, very interesting. And when they do come about, which but they haven't so far, they've failed every time they've been tried. They have failed, these algorithmic stablecoins. Um, Whenever they come, they might be the tool of choice for anyone that actually cares about the future of decentralization and crypto assets. If they're able to provide the yield or protect the money, therefore be inflation protected somehow, that would be enough for them to be better money, in my mind at least, than CBDCs. And then you have crypto asset backed stablecoins like the DAIs and the MKRs, or the RSRs, RSVs, or the Terra USD, where they use either mining power in the case of Terra USD, or other crypto assets, whether it's a basket of them like Maker, to create loans, pretty much credit of on their own money. So what they do in these situations is not that complicated. They create a collateralized debt position where they put $5 worth of, let's say, Ethereum for this scenario, and they spit out $1 for every $5 that they loan in. Therefore, that if you look at this, now they have $6 worth of their money, five being locked in this vault, one being in a stablecoin form. Now, the value of the people, the money that's locked here, because the crypto assets might be very, very flexible and very variable and volatile. However, as long as they don't reach a point where they are 1-to-1 or under, then there's always should be covered. The risk assessments in these algorithmic backed, crypto asset backed stable coins, because they do both. They are able to mint new DAI because of code, which allows them to create credit for themselves. These are not going to go away. There is use for them. They are the basis of decentralized finance at the moment because you always need to peg at a stable value to be able to return interest. So when we are looking at the way that money works, we need to understand that stable coins are the best tool we have currently to create financial contracts in Ethereum, in other smart chains, and so on and so on. So I don't think their value was going to go away. I think buying some of the main governance tokens for these stablecoins is a very good decision. Maker did what, like a 10x or something or more, or is more than that. Uh, RSR did something like a 25x. Like these companies did go like crazy high, and there are others that failed completely. And of course, I bought the ones that failed, not the ones that succeeded totally. Besides Maker, uh, but that happens with everything that you want to do. You want to take a risk and get a high reward. You're probably not going to succeed in that because that's the point of risk. But again, I'm a big fan of stable coins. Now, just to conclude this conversation, because now we opened up a topic that I love to talk about. Regulations against stablecoins are coming. Like they're here. They're being reviewed currently at the European Parliament. They're called asset reference tokens. Asset reference being anything that has to do with metal, commodities, stocks, or sovereign currency. So the whole of Mika was pretty much created and influenced, at least it seems like it to me, from the desire of the European countries to go against a big incumbent entering the money industry, which would be in this scenario DM and Libra. However, when it comes to the risks that you see in a token like Terra USD, well, at least you see the risk. There are billions of people in the world that don't have the euros like we do, or the dollars that they have in the States, that don't have good sovereign currency that they can trust, and they can't see the risk because they're supposed to be riskless money. But that's not the case. Like, it's true that you will have hyperinflation in some countries. If you are in Angola or in Turkey or in Venezuela and they provide you an option to have your own fiat currency from your own country or Terra USD, I can tell you that as long as someone is tech savvy, they will probably prefer Terra USD. And I'm a big fan of Libra. Big fan of Libra because billions of people that did not have access to good money will be able to get access to Libra and store their wealth and build their wealth digitally, where nobody can actually effectively confiscate that. Although, I mean, that's a permission ledger. It, you can always find ways to bully a company to provide you with money from other people. That's always a risk. But the rewards are higher than the risk for many, many people.
That's amazing, guys. Thank you very much. I mean, we're enjoying so much. I'm enjoying so much these conversations. Really, really interesting. I want to just, for the last part of the podcast that is left, concentrate on the project that you're working on. I mean, I think not many people know. I mean, in our community, not many people know. The most advanced do, of course, but not everybody knows about a DAO, right? So, if you would tell us more about what a DAO is and how it's going to affect the whole ecosystem, and what are you in particularly working on? And I saw the project. I've been participating to some calls, and it was really, really amazing. It's really, really interesting. So I really look forward to your explanation.
I want to give the floor to L briefly because I want him to discuss what a DAO is. I know that's his specialty, and then I can grab the mic again and discuss what we are trying to build, as well as what the lab is trying to build and how someone can participate in our work. So the floor is yours.
I will just give you a very brief overview of what we mean when we say DAO. So DAO is a decentralized autonomous organization, decentralized in the sense that it is not a conventional company, it is geographically distributed, and it relies on the blockchain. It is autonomous in the sense that it does not rely on the laws of the physical world and of the world, but rather on smart contracts that conventionally execute based on pre-programmed code, and it is an organization in the sense that it is a collection of people that come together in order to fulfill a common goal. And I'll pass it on to Xenophon to explain what our goal is.
Absolutely. And for that, I think we need to start from the history. So earlier in the year, the first bubble came for crypto. We were looking at Bitcoin at 15K for a long, long time, and then boom, 30K within 2 weeks, perhaps a bit more, perhaps a bit less. That kickstarted this cycle we're in, which we expected anyway if you were in the industry. And in that time, I decided to create a community that would be both international in nature and scope, as well as focus a bit on Greece. We looked at the industry in Greece and we saw tremendous skepticism that was unwarranted for some of the innovations taking place in these smart chains, as I like to call them. And we saw a lot of hostility on a couple of new ideas, at least I did. So I created this community for two reasons. First, because I want to protect my community and my friends from being scammed from bad projects that are prevalent in the Greek ecosystem, the ones that promise the moons and deliver nothing. And we're not talking about Cardano in this case, because Cardano is a serious project, even though we don't perhaps like it as much as others. We're talking about bad projects. I'm not even going to mention them because they're scams that were prevalent in the Greek ecosystem. That was the first. The second one was to embed this understanding and the value, and to build this community of novice people entering the space alongside my network and the network of my network, which I invited to participate in this community, and we flourished. We did not expect the growth that we saw. However, we soon realized that the knowledge gap between the novice investor that still wants to yield farm but doesn't actually know how to do it, and these are, mind you, not 20-somethings. These are oftentimes older gentlemen that have been in the financial industry for quite some time, that understand the main ideas behind it, but perhaps might not know how to get these things deployed. We realized that people were eager to learn and eager to participate in these opportunities, but there was very few ways that we could guide them effectively, which is why gradually the discussion of this DAO emerged. And the DAO functions as a community managed pool of funds where you can exit at any time you wish and you can enter anytime you wish. There are some limitations for the earliest versions of how often or how much or how little you can invest, but that's simply so that we can test the waters why we actually built. This DAO that will deliver a couple of key services to our community members, which are cross-chain yield farming services. That means we pool money together, we delegate them to a team of experts, including both the people that are in the call and others which could not make it. We plan along, we have a multi-sig so they can protect the money as much as we possibly can, and then we move to deploy them. That's at least what the main concept is. In the near future, we hope that all of this can be done algorithmically without trusted delegation of funds and decision making, with voting and with grants that can actually help build some of the ecosystem in Greece. And as I was saying before and over the chat, the talent in Greece is world class oftentimes. The people we have in our community are, in my mind, the best that are active within our community in Greece, because they know what they're talking about and they are willing to sit back and research thoroughly before making a decision. So that's why these people are selected by the community to lead this initiative. Now, furthermore, besides that, we created multiple other projects that are coming outside of the community. We issued the first NFTs in Greece. We issued the first social token NFTs in Greece. We've already started educating some of our developers in our community in Solidity. We closed multiple partnerships, including one with Consensus, where I'm going to become their ambassador in Athens. And that will allow my community and my developers access to their blockchain academy for Solidity, which is crucial because there is not enough talent. Like everyone that's writing Solidity is either wealthy and rich right now or is building something that's going to make them rich. We need to have a recurring system of talent development. We also started a partnership, which is almost complete. These things, I'm telling you these now because they are going to be complete in the next few days. This other partnership is with a design and UX UI firm called Prince & Co. They are co-creators of Google Creative Lab, and they are in charge of rebranding the Greek economy and the Greek tourism industry. So they're going to be coming in, helping us with UX, UI, and design and branding. And lastly, we built a partnership with WASIO. Now, WASIO are legal tech experts, which are looking to build the first DAO in Europe, and that's going to be Athens DAO. The Athens DAO is going to be a compliant firm. And next to the compliant DAO, we will have a development studio, not a development studio, a venture studio, a startup studio that will manage the tech talent and the wages and the costs for building this DAO. This is regular practice across the industry, but we'll also focus on helping the community build its own projects out, projects which can benefit the DAO in its activities and yield farming. So what we are trying to achieve here is build an ecosystem of world-class talent and success. It's going to be a big path to achieve this. However, the talent is there. The desire is there. We have over 20 people volunteering for work. Both George and Elle, who's in the call, volunteered their time to be here. I'm not paying them for this. They want us to make it happen, make it work. We have over 7 full stack developers working with me at the same time, learning Solidity while they go along, helping me deploy this DAO contract in a sidechain, which is going to diminish the gas needs and will allow more access to our members, who are also educating in what it means to access these L2 solutions. And there are multiple other projects, which I'm not going to get into detail now, that are being deployed with parts of our community. So we expect that if things fall along the way as we intend them to fall, if blocks are filled, as we say, that we may be one of the pillars of the Greek ecosystem when it comes to crypto. That's the goal. The goal is to bring Greece and Athens to the level that we should be. And we are lacking compared to our neighbors, including Italy and Turkey. Turkey is number 5 globally for crypto asset adoption. They have a very similar culture to us, although we don't like to talk about that much. So that's the summary. That's what we're trying to achieve. If you are looking at equity investors and venture capitalists that are trying to enter the space, they would have a tremendous opportunity to do so through the lab, which will be compliant legal entity based in Luxembourg, most likely. It's being built right now, that they will be able to have both discounted rates for offerings of our project tokens when they enter the market, and they will also have equity protection, and they would have an actual vote in a board because they are equity shareholders of a legitimate business that exists already. We are not reinventing the wheel. We're trying to merge the two. And we know we can do that because we work with policy and we know what's coming. So that's that.
Thank you. One question, 2 questions about, and to finalize. If there is anybody that would like to learn, cooperate, become part of your community from 2 sides. One side is people that maybe they're very young. We have some people that are really young and maybe they don't have much money, but they would love to learn or eventually find a job, or eventually find an opportunity to interact with your community, to learn, eventually to participate after they learn, of course. How would they do that? And for the other side, if there's investors that want to support your projects, and with sticking money into it, putting financial resources that could be helpful for your community at the beginning, how would they do that? So those two kind of figures in our community, how would they be able to participate to your ecosystem?
Absolutely great questions. For people that are trying to enter the space and learn, Currently, we won't be able to help them at the moment, but by the time that this podcast becomes public, that probably will be changed. Right now, because we are building multiple projects, we have a vetted, curated community which is private, and we're keeping it so because we discuss sensitive information about what we're trying to build. And we want to make sure that the ones that we have there, which is nearly 100 people, are all high quality, active members of our community, which is what they are. However, we haven't skipped from what we started. We still want to help novice investors and novice participants in the community learn the basics of what the market is and also learn how to guide themselves through it and perhaps even learn to code because we want to provide these services too. We expect that by the time we get this project up and running, we will open up the community publicly at that point. We will continue to grow it. We'll continue to grow it in universities as well in Greece because it's important that we help uh, get people in now that they're learning and growing. So we definitely plan to open the community up and we want to be good at what we do first so that we can show that we are builders. We're not just talkers, which is a big part of what happens with communities. So that's the first answer. The second answer, when it comes to investors that are potentially interested, they can reach out to me over LinkedIn, xenophon.contouris. That is Xenofon. That's my first name. Last name is Kontouris. Or they can reach me on Telegram simply at Xenophon, which is Xenofon. There's very few of us, so they'll find
Thank you. We're gonna put all these in our in the link below the podcast, and we're gonna of course put them on the Discord and our Telegram so that you can be reached. I think if Mehdi does not have any other questions, I don't know. We really coming to the end. So, is there anything else that you guys want to add? Anything that you it was amazing. I mean, for me, I just want to thank you for your availability. I really appreciate your, you guys are amazing brain, and anytime you guys, have a topic or something to say, we learn so much from it. That is really, really, really appreciate your support and your, all your information. So I want to thank you. And if there's anything else that you had, I think we can probably finalize it here. So
there's a few things that I'm going to say. First thing about the CPA for crypto, there are companies building analysts for DeFi, and that will be the analyst of the future. So you asked about this at some point. Consensus is building this service, and they're building teams to provide these consulting services. And I'm sure others are doing the same. We believe that the analyst of the future needs to learn code and at least to read it, and also needs to learn tokenomics. And we have some of the best token experts and token engineers in the world within our community. Lisa Tan, specifically of token engineering, is part of it. We have a few others. Some of the biggest people in DAOs in Europe and in the world are also active. That's the whole point of keeping it curated and private at the moment. The other thing that I wanted to say is you kind of asked us in the past to provide you with what's in our portfolio right now. So I'm going to go around the table and I'm going to ask both my colleagues for one recommendation for one project. And I kind of have these from you from the past. So I'm happy to jump in and provide influence on that if you want to. But my project to watch is Sovereign. I'm going to go with Sovereign, which is DeFi for Bitcoin. George.
I'm going to go with Rune.
And L.
I'm not sure if I feel comfortable. Just sell at the top. This is my advice.
Great advice as always.
Yeah. Thank you, guys. Thank you very much. I appreciate it. Thank you. Thank you.
Thank you, Tony.